I think, the one of the two subjects that even Trump can't overcome. And that is, this country is just beyond indebted. 36 trillion, Congressional Budget Office, last place where there's any bipartisanship left, says we're going to 54 trillion. That's without a recession. You take a $50 trillion deficit, you put a 5% interest rate on it, you have a $2.5 trillion interest expense. The best this country has ever done was a couple years ago in revenue, just under 5 trillion. So call it 5 trillion. And let's say Trump does magic and Musk does magic as well, and they boost that even up to 6 trillion. The bottom line is almost half of our income is going to go to pay an expense that has to be paid. So while everybody's all excited now, and certainly into the early part of the year, that's still the number one issue that I certainly can't get around, and I think people have to prepare for. And an asterisk to that is the states and cities are far worse because they don't have the printing press or the ability. You look at some states now, take for instance California, the ability to balance its budget is gone beyond possibly. So there are a lot of things wrong about the debt. Then the second biggest problem that I think, and again, it's not being addressed at all, not only not in this say no to bah humbug season, but all the time, is the coming retirement crisis. 65% of Americans are working paycheck to paycheck. They are never going to live that lifestyle that the financial commercials will show them and all, where the last 20 or 25% you live your life in somewhat of a luxury. The problem with that is as they get older, it'll be harder to work. Trust me, for somebody that's 68 now versus when he started, he was 28. But the other issue is they're going to be more dependent on government to help them through at a time when the government itself is going to be. The market is priced for perfection. There is an assumption that it can continue at these highest valuations. Certainly the discrepancy between valuations placed on U.S. companies and companies outside the U.S. and decent markets, the spread and difference between how markets are valuing them never been greater. There's a level of complacency that I've never seen higher anywhere, not only among investors, but among the investment community. And I think there's an asterisk that's important there. 40% of people who are licensed to give financial advice in the United States right now weren't born when I started in the business. Now, that doesn't mean you can't be very intelligent and be young. Problem is they basically have experienced a one-way market. We have not had any real length of time where markets didn't go up, or they didn't go up as much as people have grown accustomed to. And that's the third problem and last problem. We have a planning group, been doing it for 25 years, and still 7 out of 8 out of 10 families come in, even the athletes that I once dealt with on a regular basis, are living at least one lifestyle above where their finances are. People say, how do they do it? Well, they get more and more into debt. They borrow. They have high car loans, leases. They're deferring maintenance not only to their own health, their home, and they're living a lifestyle. And they've grown accustomed to higher returns that may not be the same in the future. So all in all, to answer the long-winded question, is getting through this no bah humbug season and getting to the coronation, which it's basically coming, of Trump on January 20th, I still think there's many, many issues that we need to be concerned about. Well, they've been so off the mark for so long. Let's not forget, this is several years. First of all, they never saw inflation. Then it was a word that's banned in all Federal Reserve buildings. You can never say the word transitory again if you want to work at the Fed. Then we've had most recently a person that ran the Fed and ran the Treasury who's just been perhaps one of the worst people ever put in charge of any department. And now we have a Fed that says that they're going to mildly approach the reduction of rates. But here's the issue. If and when we get this rate cut on Wednesday, and I think it's correct, I think it's priced in, the problem is we're still going to have the 10-year and 30-year higher than when before they started the cutting the rates. So what do you do then? I think the certainty that people have always used the Fed as the Fed will always be there for us. The market can never really get hurt and all. I think that's the dinosaur period. I don't think they have the power or the ability to do that. Now, of course, the Trump enthusiasm can mask that for the first few months out. But he needs to come out of the gate, if I may say, pretty hard and fast. He has to show some real success early on, because less than 2 years from now, there's another general election. Not only does Congress get voted again, but there is a lot of Senate seats up, and this time there's more Republican seats up. So if he doesn't get out right away and people start pulling back and not 100% behind him, a lot of things that people are betting on and hoping he can succeed at may not happen. And that's where the vulnerability of a hard market correction, or actually bear market, can be born out of. There's nothing in history that says getting into tariff wars are good for anybody. I think a lot of this was blustering. Same thing like when people heard, anybody that's thinking you're going against the dollar, we're never going to trade with you and all. Trust me, that comment was another marketing tool for the BRICS to get more countries involved. Not to scare them away, but to actually realize, look what he's doing. And now since then, we've actually taken the interest that we froze from Russia and given it to their enemy. Again, these are the things that are going to be pointed out to countries when they're spoken to about maybe you want to think about working outside the Western world system and kind of coming with us. A lot of people said that was the death to the BRICS. I think by the next fall, we'll see that not only was it the death, but it was actually an acceleration for them to get even bigger and better. One thing you don't want to do with Trump, you don't want to get into a war or wars with him. And I think Putin and the Chinese, they know that. I think they've learned that from the first time around and all. But I also think that these are things that are set in motion that don't have reversals in them. It's clear that we continue to see a lesser use of the dollar. In fact, some say it's down to low 50% now usage and all. That's happening for a reason. And it's not going to all turn around because Trump somehow makes everything better. Again, markets are acting like that. Markets are hoping for that. But markets, when they don't perform on high expectations, that's when you have crashes and hard corrections. Yep. And that's the problem with the Trump candidacy now, that not too long after his time in, if he doesn't show a lot of success, markets can become very vulnerable to a very strong downdraft. Look at the valuation stocks. They were at one of their lowest levels ever. People are just continuing to buy highly speculative, technology and all, while proven value stocks relative to those valuations are dramatic. I personally don't want to own general equities in the U.S. unless they're related to certain natural resources. I don't have an issue of looking outside the United States to certain countries. I would put an asterisk about Western Europe. I think the EU, as we know it, is finished. I think the euro will trade at parity as well to the dollar. But I still think the performance of the BRICS and Asia minus Japan is the area where growth will be most over the next 10, 20 years. And I wouldn't have problems owning stocks in Singapore or even some of the Chinese stocks now where they're being priced. My feeling to my clients have been until about a month ago was, if you want to play it like a high technology stock, but it's not the second coming of Christ. It's not going to cure cancer, even though you would think it does based on what the Bitcoin talks about. But I'm most troubled about its biggest spokespersons. When you telling people a couple of years ago to sell everything you own, stocks, bonds, real estate, homes, and buy something, you run from people like that. No matter what they say, even if they come out somewhat successful, you just don't deal with them. And unfortunately, the biggest spokesperson for them is that person. But separate from that, the argument that it could become a reserve currency is preposterous. Now, I don't want to get into one of those people that the media drags out to argue all these people, because this is a cult. And in a cult, you can't tell a cult person anything different. Before Jonestown, if you went to any of those people and said this guy's crazy, they would have told you you're nuts. And yet we know what happened there. Now, I'm not saying people that own Bitcoin are going to commit suicide, but I am saying that it is something that isn't functional for me to be treated as anything other than a total speculation. If you want to do that and think that they can pump it up so much more, go ahead. I'll take something that worked for a few thousand years. And by the way, just to those Bitcoiners, central banks that are loading up, they're loading up on gold. They're not touching Bitcoin because they recognize in the real world down the road, it's going to be gold and things like gold that are going to help turn the world around, not Bitcoin. When you get outside of the U.S., especially in Asia, I read purposely Asia financial news to see how the Asians are thinking, Chinese. They look at that metal in a much more positive, and they're the people that have been greatly accumulating it. We still see here, gold will always be treated poorly by the financial service industry. They treat it like kryptonite because it goes against what they make their living on, which is financial assets. So you're just never going to see somebody come on and tell you to buy stocks, bonds, and also gold. Only when it runs up a lot do we even see a word or two from the financial media about it and all. I think it's performed very well, and the fact that it's still over here and not in front and center tells me it still has a long way to go. And when you say now that even with a 2650 or 2700, wherever it is today, it's the same lack of complacency. There's no surefire people, other than a handful of people that have been in it 30, 40 years. Yeah. And that's why it still has a ways to go. It's when you hear how Bitcoin has become and spoken and all, that's when you have to start looking for the exit. We're not even remotely close to that for gold and silver. And by the way, I was a big gold person, but never enthusiastic for silver. But silver's fundamentals have changed dramatically now. And you got to keep it on the same level. Yeah, I may still own a little bit more gold and silver, but gold and silver, and of course my metal for 2025, copper, I think they're all going to have good years, even things like zinc now. I'm still very, very optimistic with a good sense in my head, not to get caught up in it, that gold, as I said a year ago, will see 3,000 without ever seeing under 2,000. It's still not going to be centered in the financial community in the U.S. because, and also, there's not a lot of ways for them to make money in it. It's a very important asset to hold. You have car insurance, you have home insurance. Most people listening to this have a bunch of financial assets. Do they have an insurance policy against that? And that's what you own gold for. I've said for years to clients to come in, and this happens all the time. And I say to the clients, looking here at your portfolio, you should own gold, but hope it don't go up. And they pause, and then they turn their head like a puppy and go, Mr. Grandich, why would you want me to buy something that isn't going to go up? And I would tell them, of course, if this does go up, what you own is likely to go down. So buy it and hope it doesn't go up. And I don't think that's changed. I think you have to have gold minimally as an insurance policy. The United States is going to suffer a big infrastructure problem. Infrastructure in America is teetering and deteriorated to the point where studies by independent groups say it could be one of the biggest issues that we faced in decades as Americans. Our bridges, everything about it, our transportation is all in trouble, and that takes a lot of money, and everybody forgets this. The original QE, when Bernanke sat there with Obama, was to be put into infrastructure that would help rebuild America and get us out of the financial crisis. It never got to Main Street. It stayed in Wall Street, that money.